If you're learning to trade, your account balance may be on the smaller end. And that got me thinking, if I was starting out with a small account, how would I trade if I only had, let's say, $1,000? I'm Robert Roy, founder of WealthBuildersHQ.com, where we teach traders technical strategies to build their wealth using the financial markets. And in this video, we're going to discuss how to get started trading with a small account. Now, before we do get going, let me be clear that this is for educational purposes only, and it is not financial advice or recommendations, and that you should never start off trading with real money. Now, with that out of the way, here's a few things that you should consider. First one is pattern day trading rule. Basically, that says if you have less than $25,000 in your account, you're only allowed to do 3 intraday trades in a 5 trading day period. Well, what does that mean? It means if on Monday you did a trade where you entered and exited, that counts as 1. If you did a trade on Tuesday that you enter and exit, you did another one on Tuesday that you entered and exited, you did 3 trades in a 2-day period, right? You can't do that many trades when you get beyond that number, right? So 3 is the maximum under $25,000. So you've got to consider that in the trading realm. If you're going to be starting with a small account, you may not get off as many trades as you want. And that doesn't mean it's a bad thing. It's just something to be aware of as you get started. But I'll show you a little way to get around that in just a minute anyway. All right, let's talk about account types like margin accounts versus a cash account. Margin account, basically you fill out a margin agreement. You sign an agreement to borrow money from the broker. On an intraday basis, it doesn't matter. You're not paying anything. There's no fees, costs for it. They're lending you money during the day, margin. So basically what happens is you can continue to trade as often as you wanted using their money, right? Where with a cash account, if you have $1,000 in the account, and let's say that you bought $1,000 worth of stock and you sold that $1,000 worth of stock today, you're done. You can't trade any further. Whereas with a margin account, you could. Right? But with a margin account, you can only trade up to 3 intraday trades in that 5 trading day period. Cash account, you could trade as many trades as you want as long as you still have enough cash to do that transaction. Nice thing is, even if you run out of the cash, well, that means Monday, Tuesday, Wednesday, Thursday, and Friday, all 5 days, you could do an intraday trade. Now, if you're holding the stock or option overnight, it doesn't matter. Pattern day trader rule does not apply if you're holding overnight. So some great tips to keep in mind as you're getting going and getting started. So what trading vehicle do you think you should use? Well, for me, my recommendation would be if I'm starting all over again with just $1,000, I'm going to look to start trading for sure with options. I didn't start with a whole lot more than that when I got going in 1997. Right? I started with options. I did a strategy called channeling options. Now, I wasn't taught that strategy. I was taught, at that point, they called it rolling stocks, but I was taught a channeling stock strategy where a stock moved between support and resistance. You buy as it bounced off support and you sold when it got just below resistance. And that's a great strategy. Problem is it only works as the stock is going up. You could do the downside, but the shorting of the stock became very high risk to me. We also did it on very low cost stocks because, well, who wants to go buy a $100 stock and buy hundreds of shares of it? It's too costly. So I came up with a strategy when learning rolling stocks and learning options. I called it channeling options. And basically I found a stock that was channeling, and when it bounced off support, I would buy an option, a call option. When I got up near resistance, I would get out of that option. So maybe I bought it for 2 and I sold it for 3. When it rolled over, I would look to buy a put option. You buy a put when you think the stock is going down. I would buy a put option, and before it got to support, I would sell it. Maybe I bought the put option for $4 and I sold it for $5.50. That strategy for me was outstanding. You could trade stocks, you could trade options, you could trade any vehicle you choose. For me, that's the strategy I would use had I been starting all over again right now and just had $1,000. Let's look at a stock to consider right now. And this is as of the recording right now of this training. I like stocks that are lower priced, but have large intraday movements to them for a newer trader or myself, because they're on my list. They're on our power option playlist. They're on our Pop 5K list, which we use inside of our mastermind group. I actually went over it last evening. That was my training on Pop 5K. And that's just utilizing a smaller account, kind of like we're talking about here. Well, Roku, $70, $80 stock that moves $10, $12, $14 a day, intraday between the high and low. It is an outstanding mover to me. It's got a wildest average true range of about 10 or 12 bucks right now. Stock price goes up, we may have a bigger range. Stock price could stay the same and it drops in the future. But right now, we look for stocks that have a lower cost to them and a bigger move. And what that does for me is it allows me to buy options at a much lower price as well. If I'm buying an option on Costco, which again at this time is over $500, versus an option on Roku, I'm going to pay a lot more for the Costco option than I am for the Roku option, all based on cost. Lastly, I need you to be realistic. Think about this. What's the likelihood that you're going to take $1,000 and turn it into $100,000 this year? It's probably slim to none, right? Is it possible? Yes. But is it realistic? Probably not, right? Think of this way. If you can go ahead and take that $1,000 and start to generate 5%, 10% in the course of a week to start, is that doable? Well, if you could buy an option for 2 and sell it for 3, that's a 50% rate of return. So 10% is very doable. Right? If you could just get started there and grow from there, you will see this continuous action of your account growing and growing and growing. It's that snowball effect. When you roll the snowball down the hill, it doesn't get very big over the next couple of minutes, hour. It starts to gain some speed, and all of a sudden, couple of months, couple of days, couple of weeks, your account is huge comparative to where it was, right? Where it has grown and doubled and tripled from where it had been, right? But the reality of it is, you've got to think about this in such a way of what is it that I'm looking for and where do I think this goes? And I can generate an income from this. I can generate cash flow from it, but don't expect the world to get started. And with that, if you're just starting out, I developed the ultimate 30-day crash course that will teach you everything you need to know to get started trading with 1 month. It is called the One Trade Away Challenge. And in that challenge, I'll walk you through everything you need to do to become a full-fledged trader. You'll even place your first non-funded stock trade on day 10 and your first non-funded options trade by day 20. Now, you can join the challenge for only $49, and I promise that it will be the smartest $49 that you've ever spent. Click the link in the description to learn more. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And as I like to always say, you're just one trade away. Click here to check out another video from our great trainings.